Another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. My name is Chris, and it's Friday, July 4th. I was able to break away from, well, I guess not break away, I just had a lull in the day's activities, so I thought I'd come out and make a video for everybody. Um, didn't really look at the charts much after the close of the day yesterday, so just coming in fresh, looking at the charts, looking at it from the day perspective. Kind of a flat day. There was a little bit of movement, but as we can see, we have a doji. It was a green doji, and it was a two up, so that's positive. But you can see we did, um, you know, in a sense, reject off of this monthly downtrend line that we've got here. I don't want to say reject because we didn't push down necessarily. We still closed green, although it was a doji. So we do want to look out for a little bit of weakness in the market come Monday. It's pretty easy to go two down from here. But again, just kind of recapping the week. If we go in here on the smaller time frame chart, we can see that we stayed within the week's expected move box here. We got up towards the top of it. Didn't quite reach the top, but again, coinciding with this monthly downtrend line, which is the green dashed line, we've got the weekly broadening formation, which is this purple line, and we got the daily broadening formation. We had some intraday broadening formations in here as well, but as we said on Thursday, it was Wednesday night. It was expected that we'd probably get some slowdown here. All the combined with the short trading day and all of the economic data that was released, didn't expect a whole bunch of movement. So again, got pretty much what we looked for. We did take the opportunity to take a scalp in the morning, which turned into a little longer trade than we expected, but did make a little bit of profit. Kept a runner and let it play a little bit. Lost a little bit on the runner, but still ended up in profit for the day. So not a bad day for half trading day and a light trading day. Let's go in here and look on the 15, and we can see we're kind of in a downtrend on the 15. What does that show us for the hour? Not too big of a deal that we were in that downtrend on the 15. You got to turn it a downtrend on into a downtrend on a shorter time frame to get it two down on the higher time frame. So again, we watched Monday for a little bit of weakness here on the 1 hour. Let's go ahead and look at the 4 hour. Well, let's go back to the 1 hour real quick and look at the highs, because we basically had equal highs. This was actually a lower high, but on the lower time frames, we can see that it does look kind of like a double top, at least on a short time frame. We did break the neckline here briefly, but we never closed below it, which is why we didn't see the push down, and we just continued to move sideways. So let's go look at this 4 hour, and again, it shows that we need to watch Monday for a little bit of weakness. We could get a 1-2 up combo 2 down, which is one of my favorite strats, 1-2-2, which would also make a 3-2 combo 2 up, combo 2 down. Let me make this a little bit wider in case you can't see, but we've got the 3 here, this 1 and this 2 combined to make a 2 up. This 1, and if we go 2 down, especially if we breach the bottom of this 1, would be a 2 down. Now either way, the target is the bottom of the 3, and there's, I guess, 3 reasons for it, right? So the first is the 1-2 up 2 down. The magnitude or the target of a 1-2 up 2 down is the low well, in this case, the low, because it's a 1, 2 up, 2 down, of the candle prior to the 1. So here's the 1, here's the candle prior to it, that's the 3, so the target is down here. It's funny, it coincides with the month and the quarter flip. Not a big surprise there. So if we look at it from a 3 combo 2 up, combo 2 down perspective, again, the target of the 3 2 up, 2 down is the low, in this case, of the 3 before the 2 up. So 3 combo 2 up, 2 down. Again, the target is this the bottom of this 3 here, which is 24.45, just above the month and quarter flip 24.38. So we've got the bumping here up against the weekly broadening formation, this purple line. We can really get rid of this daily broadening because we've gone through it, but we've got a daily, we've got a 4 hour, we've got a 1 hour. So you could see there was going to be some resistance here from a trend perspective and a broadening formation perspective. From just a horizontal level perspective, again, we've got this 78.6 of the 2024 run up. It's the 100% or the bottom of the range from September that we were in, from September 24 to December of 24. So we've got a lot of levels here. We've got the last quarter's high, last month's high, a lot of horizontal levels that would indicate we could probably slow down as well. And also we're approaching this year flip. So as you get closer to flipping the year red, the bears are going to give it all they can to keep that red. So you're going to get a fight here in the flip, which also coincides with the 78.6 of the September 24 to December 24 range. So we've got some, higher targets here up in the 35, 36 area, but we've got plenty that we need to fight through, broadening formations and whatnot. So maybe expect a little bit of a pullback next week. There's no economic data, and just as easily as economic data can pull us lower, economic data can also push us higher. But if we don't have any, then do we really have any catalysts next week? Earnings does start next week, but it's financials mostly, and I believe more towards the end of the week are the bigger names. I believe JP Morgan is on Friday, so we do want to watch that. We could have just a pullback at the beginning of the week and end up pushing higher. You never know. We'll just continue to play it how it goes. Continue to just read the charts in front of us. Let's go in here. We've looked at it at the 4 hour, looked at it the day. Let's look at it from the week perspective. How did we end up on the week? And if we look at this, another cause for possible caution and of a possible pullback, we've got a 3-2 up. Now it is a green 2 up, and it is a hammer, so that is a more bullish 2 up, but you do always have 3-2 up, 2 down, which could be on the table for next week. If that's the case, we go past the 3-2 up, 2 down that was on the 3 combo 2 up, 2 down that was on the 4 hour with the target of 24.45. All of a sudden, if we trigger it on the week, now look at our target. It's down here. Target of 2028 with the gap as a possible magnet. We've got the 50% of last month. Again, I know you've heard me in the past say I like retests of 50%. Many times in a bull run, you'll just get a 50% test of the previous week. But if we get a real pullback, then that's when you look at the 50% of the month. Especially since we're so early into this new month. So, something to look for. We're hitting these 50-day and 200-day moving averages. If we can get above there, then we can get this short term, this 50-day moving average moving back above this 200, which is always a positive sign. Bullish cross, as some would call it. But yeah, I mean, some caution to to have out there. What am I trying to go in? Let's go into the micro charts. Some caution to keep out there, but we're still pretty bullish. You can see we've got the full time frame continuity on the higher time frames, except for the year. The year is still red, so we do want to look out for that year flip that we were talking about earlier. Let's see here. What is this? Why do I? I'm not sure why my quarter one is up there. But anyway, that's the flip for 2025. We were already above it for the week. We were above it for the quarter and the month. So again, we've got this slight downtrend, which was flattening out there. So if we go ahead and draw our broadenings from a high to a high, yeah, see, that's just a horizontal line. So we've definitely got flattened out, especially if we're coming back. What's this high? 2643. Yeah, 2643. So we do still have the downtrend line there that it's respecting. It's flattening out, but it's still closed underneath this downtrend line and totally fell out of that uptrend line. So we won't even draw that one in there. Oops. Come on now. Yeah, we won't even draw that one in there either. It's not even close. So we can see we've got more of a bearish look on the 15-minute. But again, somewhat expected. Let's go ahead and look at the 1 hour. We can get our lines in here. Because again, this was technically a lower high. So we'll put it out there just to respect it. But let's see, yeah, we don't have anything there. We'll draw this broadening just to have it. No, it was there. And this was a 15 minutes, so we'll remove that. We'll put this in here. So we know where our 1 hour broadening is at. So we know we're in a downtrend on the 15. We're in a slight downtrend on the 1 hour, and you know it could be expected to come down even to this broadening formation on Monday. Find support here on this 161 fib of the gap and go from Monday, June 23rd. I believe that was the tariff reprisal, I guess you could call it. That's also down here at last week's opening print. We'll go ahead and get rid of that just because it's last week's, it's done. We'll be putting in a new opening print for this week when it starts. But we can see we've got this hourly broadening formation here. And, you know, it's perfectly understandable if we've got some type of pullback. We hit this 238 fib extension. We could come back to this 200, or we could, in respect to 15, maybe bounce off of this 4 hour and 1 hour, daily and 4 hour uptrend lines. Or if we drop through, we're, you know, going back into last month's range, right? That's last month's high right there, last quarter's high as well. We go down, we can bounce off this 161.8. That would coincide with this hourly broadening. So if we get a little bit of a pullback on Monday, kind of expected, almost actually looking for it at this point. Will I be buying puts? Probably not. If I do, that would be a pure scalp. You know, we've still got this full time frame continuity thing going on. We're in an uptrend. I'm probably going to be playing it lighter right now anyway, just till it makes its decision. We've got this monthly downtrend line. You know, we'll see how Monday, you know, really starts out. We've got a gap from Thursday as well. We did gap up on Thursday, so we've got to put that in the chart. Yeah, 4 hour looking kind of bearish. We'll go ahead and move this one, this 4 hour broadening, just to mark it out. All right, and we've already got one down here, so we can see the 4 hour much lower than the 1 hour. It gets down here into this gap, and then even further as you go in time. So let's test. We've got this 50% of last month. Very reasonable to think, we've got thin structure right here, got a gap, and then correction, that could be made in this area to bring us down and test last month's 50%. So let's look at this day chart real quick on the micro time frames. I know it's going to be ugly for a second, but we do need to, actually no, we didn't gap up. That was the Qs. The Qs gapped up. We didn't gap up on Thursday, so no real need to look at this day chart. The week, we do need to move the high-low or high 50% and low marks for last week to this week, or previous week to this week. But that's all we need to do on the micros. So let's real quickly just cycle through the others. It won't take long. That way we'll have a clearer view on these bigger time frames, exactly what's going on. Edit this. Let's change it to the hourly colors so we know it's on the hour time frame. Oh, it didn't change it. Let's go. Come on. There we go. So this broadening. Okay. So we're looking good on the hour chart. Let's go to the 4 hour. Let's move this guy over here. Okay. We're good there. Let's go to the swing chart. I forgot to get rid of the week. Remove that. Also remove the opening print. We got rid of the week on this one already, so let's go back to swing. Just get these moved real quick so we can get back to the analysis. We just got to make sure that we've got everything properly drawn so we're ready for Monday. Activate. My motto when I'm out here trading is put in the time, have a plan, trust your levels, and execute with precision. So that's what this helps me do. Hopefully it's helping some of you as well. Let me make this the hourly color. Alright, so we've got everything marked up. The next thing we want to do, and I'll talk about, is because you can see the purple box. I continue to have a purple box up here, and that's my week's expected move. Anything related to the week is going to be purple. So you see this purple broadening formation, purple box. Purple box signifies the week's expected move. So let's go here, and if we look at the options chain for SOXL for next week, we can see there's a plus or minus $2.42 move. So if we look at 2643, let me just get out my calculator real quick. So we've got 2643 plus $2.42. That's 28.85. is the expected high for next week. 28.35. And let's move this up a week. Alright, and then let's look at what the low would be. Oops. So this would be 2643 minus 2.42, and that's 2401 is going to be our low. So let's just get this so it's easier. We don't have to recalculate it. Okay. Let's just go ahead and move these for each. We move this up a week. We put in the numbers. And you can see how this can go very quickly. So it seems like a lot of work, but you put in the time. Actually, I moved that one day too far. There we go. Let me make sure. Oops. Let me make sure I didn't do the same. It's on the swing chart. Okay, we're good there. So let's do this. And there we go. We've got our expected move for the week. So if we go, let's go to the swing chart. If we look at the 4 hour, we can see that expected move. Can't expect too much for next week, even if we do get the pullback. We do have the gap here, so we can hope, but we can't expect too much, right? There's plenty of times the expected move has been breached, but a lot of times it's due to catalysts, but a lot of times it's due to unknown catalysts. So let's keep our eyes and ears open during the week. Anything could send us, either higher than the expected move or lower than the expected move. We've got president's tweets, geopolitical things going on, tariffs. It could be anything at any time. So we could breach the expected move, but let's stay level here. We do still have the full time frame continuity to the upside, and we'll play it by ear. But we have leaning more bullish with caution about any pullbacks. Pullbacks would be expected. Probably scalp them, but just be ready to have entries on longs. So let's look at the week, because I don't believe I moved this one. So I got to move the high 50% and low for the week, so we know where those are at. And let's see, there we go. So remember, we still got the 3-2 up on the week that could be on the board for 3-2 up, 2 down, but we've got that's a bullish, a green hammer. So let's not expect or not predict that it's going to pull back, but we can expect that it might. So, last thing we need to do is move our 4 hour markers and previous high a day, previous low a day. Whoa. Come on now. There we go. There's our previous high a day. This is the second 4 hour candle's high. The second 4 hour candle's low. And the previous low a day. So there we go. So, yeah. That's on the micro. Let's go to the 4 hour. Alright, so we need to always know where these levels are at. Oops, looks like I didn't move that one last week. Thursday. Alright, so now we know where the 4 hours down triggers and up triggers are, where the targets are, which would be previous high, previous low a day, which if those trigger would then give us our next targets. Now we'll wait till the morning to move our overnight high and overnight low, but we do have that out there. Alright, so things are looking good. Could have a 4-hour pullback, maybe just get a higher low, not even complete the full 1, 2 up, 2 down. Hold on, my dog needs to be out. Well, that just shows you that this is all live. I don't have any production going on. I'm just going through this real time with you guys. So let's see. What else do we want to cover for the week? I think everything is pretty much covered. We just want to, let's do this. Oh yeah. So, all right, so I do keep some notes on TQQ just to be safe, but we'll go back to this will be Thursday, so Friday. So this is notes from July 4th. We'll have 122 trading days left. We closed at 2643. This will be for the week of 7/11. We don't know what the flip will be yet, but we've got our quarter and everything out there. That's 7/11. So let's go 7 to 11. This was $2.42. This was 2401 was the low. 2885 was the high. We don't have Friday's expected move yet, but we'll put that in there next Thursday night. So on the 4-hour perspective, we want to cancel. We want to put our 4-hour triggers and markers out there. So we've got the possible 1, 2 up, 2 down, but first we've got a 2, 1, 2 that we would have to complete. So 4-hour trigger for this 4 is 2634. 2634. This was a failed. Yeah, it was a failed 2 up. Red 1, 2 down, which would be 2 up. Combo 2 down. So let's see, the magnitude 2672 is the magnitude of the first one, the 2, 1, 2 down. The trigger is 2634. The magnitude is 2672, but that would trigger the 1, 2 up combo 2 down. So we've got to put that magnitude. So 1 combo 2 up, or 1, 2 up combo 2 down. Target is the candle left of the 1, which is this 3, and the low of 2445. Now we could have some extended targets there, but let's see, let's pull up the micros. Yeah, nothing really. We'll say 24, just because we've got 2373. got some, what's this fib? May to June range, as well as this fib of the gap up from 2 Mondays ago, or Monday ago, last Monday. Yeah, so we'll put 24 as a target. And that's it. I think that'll be kind of a stretch to go any further than that. Yeah, kind of a stretch. So let's look at the let's look at the upside that it could do. This is a 2-1, 2 up. Trigger being the top of the one, which is 26.43. Magnitude being the high of the previous candle, which is 26.72. Let's do that. Magnitude. Alright. And if we want some higher targets, let's pull out the micros. We'll say 27.29. We'll say 27.06, 27.29. Alright. So we do need to check on the higher highs, because as you can see, we breached this one. Actually, we won't need to check it. We're not close enough to breaching 27 or 32, so we'll leave those out. Oh. Yeah, see, you gotta watch what you're doing. I put the wrong. Put it on the wrong line. There we go. So we breached the 25.84. Let's see, what was the high? We haven't breached the 26.90, 27, 31.96. All right, so we'll leave those higher highs out here. So let's see, the magnitude of the 4 hour is the trigger of the day. Magnitude of the 4 hour, trigger of the day. So let's go to this day chart. So if we were to go to the downside, if we trigger the downside on the day, that's a 2 up, 2 down, the target being the bottom of the previous candle. So let's see, the trigger would be 26.23. 26.23 is the low. Why is this not matching up? Low 26.43, 26.23. Did we not write that down properly? $26.23. Didn't write it down properly. Alright. Let's go back in on the day. Let's get focused here. Holiday weekend. Let's get focused. Alright, so the target, or the magnitude, 24.45. And we can have a target of this next candle, which would be a 2 up combo, or a combo 2 up, 2 down. So the low we have here is 23.58. Alright, which happens to be a lower low, so we'll leave those out there. That's a 2 up, 2 down. And this would be a 2 up, 2 up. So 2 up, 2 up. The trigger is 26.72. We've already got that in because that's the magnitude of the day. And our targets would be 27.29, which is that 261 fib. 2807. Alright, those would be our targets. So let's look at the week now. Let's get our targets drawn in here. So again, if we go to the downside, that's a 3, 2 up, 2 down. Low of the week last week was 23.58. So it'll be a 2 up. Let's see, magnitude, because this is a reversal strat, there is a magnitude, and that is 2028. That would be a long trip down. Don't know that we'd really have any other targets. Let's see, low 1968. We'll put that one out here. And 1864, we'll leave that one out there as well. Lower low would be 2028. And we'll leave the other ones out there. Probably take this $6 one off of there. Alright, so if we get earning 3, 2 up, 2 up, that's a trigger and a target. So the high 2672. Target, first target I believe would be 2844, and then we've got our other ones, we've already got them written in, so we've got our higher highs. So that's it, guys. It's that simple. That's how we have our notes. Again, remember we've got our flips for the week, month, quarter, year that you can easily see. We've got our expected move that you can easily see. Make that a little easier for me to see. Our gaps above, gaps below, and then our triggers and targets for all the different time frames. All right, so let's see, 25. Oh, we do need to mark that we did trigger the 2 down, 2 up, right? So our magnitude, our target here is, our magnitude is 3615. That's what we're shooting for. That's why we have 35, 36 area marked out on our charts. This goes along with the month is triggered as well. So our magnitude is 32 on that one. So 32, possibly 36, right? If tech has a good, July, seasonality on tech is usually good during the summer, so positive. I could see us getting to 32. 36 might be a stretch, but 32 is definitely within reach. And we've already gone over how there is the caution that we have to have in case we do get the 2 down on the week. That would be a pretty big fall. I think we would have to have some type of news or something like that to spur that type of drop. But even on the day, we've got a kind of a weak day. It was green, but it was pretty even. So if we get the 2 down, go back down, we could go back down and test last quarter and last month's or this quarter and this month's flip. If we do flip, I expect it to be very short, and we would get a bounce probably off of last week's low, which coincides with last year's low. So looking for a little bit of downside ranging sideways action. We could see this turn into a range. Technically, let's bring this in nice. I want to make sure everybody can see everything. And if we look at it, there's this range above here, and that's what we're getting in. So could we do a look above, what a lot of people call a look above, and then fail back into this range down here? Possibly. We've got gaps. We've got the monthly downtrend line. got a weekly broadening. There is some resistance here. This is a bunch of overhead supply. If we do pull back, we've got it mapped out. Kind of would look forward to it, give you a chance to get more shares at cheaper price. Because if this is going down, majority of the market's going down. So whether you're buying shares of SOXL or whatever you're buying, it's probably an opportunity for you to get in at a dip. If you weren't able to get in down here, like a lot of us were able to get in. But yeah, cautious but optimistic, I would say, going into Monday, going into the week actually, because even if we get the pullback, it still could be bullish depending on how quickly, how violently the pullback is, and how long we stay down. So hope everybody enjoyed this holiday edition of Bullish Chips. Go ahead and do that YouTube stuff, like, comment, subscribe. Again, we just want to build our little community here of like-minded individuals, bringing positivity and profiting from the market, whether we're going up or down in the market. I hope everybody has a good rest of their holiday, has a great weekend, and I'm looking forward to Monday and what the trading may bring. All right, thanks again. Bye.